What's up, everyone? All right, so we're gonna go over the trades from today. I have to say, this week is night and day from last week. Last Monday, red day recap. Last Tuesday, red day recap. Now, Wednesday, things ended up turning around. I had a $10,000 day last Wednesday. Thursday was flat. Friday, a $6,000 day. Yesterday was up 14 grand. Today, I'm up 10 grand. So just like that, since Wednesday, it's nearly $40,000 of profit. What a nice swing. And that makes a huge difference on the month of October. To have 1 week or about 7 days where I'm up 40 grand, that's solid. That's really what I like to see. So what's different? Well, there's a couple things. And I would say, number one, the strategy hasn't changed, but the outcome has. And that's because during the beginning of the week last week, I was not being disciplined. I was getting sloppy. I was trading a lot of low quality setups. I was being too aggressive. I had some profit. I gave it back. I overtraded, trading later in the day. I just was not being really dialed in on what works for me. I was just being sloppy. And, this is the thing where I was kind of joking that, this last week of being disciplined has been huge. So I've been doing my discipline meditations. I've been really trying to get myself dialed in and focused, and it's definitely been paying off. So now all I have to do is be disciplined for the rest of my career. But what we know about trading and the human emotion is that we sort of oscillate. We go through these periods where we'll be super disciplined, and then we start kind of getting away with being a little more aggressive. The market's hot, and so you start to get a little sloppy, but it still works. And then you have that big loss, and now you've got to self-correct. And so there's sort of that expansion and contraction that's going to happen with every trader. And so as much as I'd like to say, all right, now I just have to do this for the rest of my career, I know that it's, being really disciplined and having the guardrails on really tight is important when things are going not so well, because you need to focus on the basics and what is most likely to work for you. But once things start to pick back up, you do want to venture out of your comfort zone and take a little bit more risk. So let's go ahead and jump on the charts here. I only traded 2 stocks today, but you know what? Look at that jackknife on drug. Just in the last couple minutes, we had a nasty jackknife right here. And this is the type of thing that I think I'm avoiding by not overstaying my welcome right now. So, in fact, I didn't take any trades on drug. It's up 67%. But the problem for me was that the move started after the open. And I already booked my profit and was double the daily goal, and I'm rounding up by $60. So I'm at $9,940.32 today. But green on 2 stocks, double the daily goal. I just felt like, look, it's not worth pushing it, right? We know my metrics. I've got them right here. I talked about them yesterday. Profitability based on time of the day, right? So doing the best early, and then, the longer into the day I go, the higher the risk seems to get, and the higher the risk of getting triggered. So first trades of the day, sat down this morning, 6:45, looking at the scans, and I saw drug was on the scans because it had a big move after hours. But I honestly looked at it and thought, no, it's not going to work. Popped up big time after hours, pulled back, popped up at 4 a.m. And at 7 a.m., well, somewhere around here, there was nothing to trade. It was just sort of fading and going sideways. So that was not on the list. But it was BNZI. Our old friend BNZI. Now, this is a stock that we've traded a number of times in the last couple of weeks. We've had some big moves on it. And so all of a sudden, 4 a.m., this thing spikes up from a close yesterday of 380 all the way to 648. But I couldn't see any news to support the move. So I don't really know what gave this that pop at 4 a.m. It retraces most of the move, well, all the way down to be to here. So it retraces 70% of the move, comes back up, dips back down, comes back up, dips back down. And then at 7 a.m., just before 7 a.m., it starts to pull away right here. So my first trade of the day was buying 5,000 shares at 575 and selling for a loss at 571. First trade in the red. So lost about $175 on the first trade. And, I was like, all right, well, that's a little annoying. So that trade was right here. So first trade got in right here and stopped out basically as it came back down. So red on the first trade, but a red trade isn't how I want to start the day, but I can handle it. So anyways, recovered that loss. And look at this, by the way, look at the side chart, DR drug. So this is the thing that drives people crazy. You buy this, you get a massive jackknife, and then it rips up. And this is so hard to trade when this happens. Now, that was a nice little micro pullback right there before that pop. But like this this will stop out all the longs who buy. They get flushed here, and then all of a sudden the shorts are getting stopped. So it's like, it's just nobody wins. It's a massive tug of war. It's not fun. So anyways, so back to BNZI. So BNZI, so first trade on it was 575, stopped out for a loss, comes back up, I get back in. We break through 580 right here, 590. We go up to 650 and 620. Boom, I'm up $1,000 on it. All right, sweet. Now I can increase my share size. Consolidation through here, take 10,000 shares for the next leg up. We get a squeeze from 615 up to 640. It pulls back. We get a move up to 650, up to a high of 660, and then we drop down. And this was one where I kind of said to myself, you know what? Just be aggressive at the front of the beginning of the move, right? Front side of the move, and then don't overstay on the back side. So when it drops down here, I just sort of thought, nah, you know what? I don't know if this is going to be worth it. And as you can see, it ends up just pulling back. So the really clean trades were early in the move, and then that was it. Now, what was kind of disappointing about this one was the sell-off. From a high of 648 now all the way back to 413, which is not surprising because there wasn't really a clear catalyst to support the move. But even in spite of that, it's a little disappointing that it pulled back this much. I mean, TWG has, the secondary offering at 40 cents a share and is still holding up relatively well. So you just never know which ones are going to hold and which ones are going to fade. So after the trades on BNZI, I, was sitting at 3,900 on the day. I was like, all right, look, I'm not the daily goal of $5,000, but it's a good day, and I had a great day yesterday. So, if that's all I get, that's all I get. So I traded BNZI from about 7 a.m. until, 7:15. And then I didn't take any trades. I sat here all cash doing nothing for over an hour. It wasn't until 9:08 that I took my next trade, which was on SGD. So I waited almost 2 hours for my next trade. Now, SGD, this one's also kind of remarkable because this thing went from 350 all the way up to nearly 7 and is now back at 367. So a pretty dramatic move. On this one, I got in a little late. So for this one, it pops up here first to 440. It pulls back, and then it goes up to $5 and it pulls back. It goes up to 540 and pulls back. Now, I tried to trade this in Thinkorswim. But in my Thinkorswim account, my small account challenge, my orders got rejected. Well, actually, they didn't get rejected. They just sat there. I have a buy order sitting here, and it's just nothing's happening. And I was like, gosh darn it, what is going on? So I tried several times to get in, and then I just ended up giving up. I said, you know what? I can't get in at this point. It's too extended. So unfortunately, I missed this pullback, and this pullback because I tried to trade them in my Thinkorswim account and got rejected each time. So that was really annoying. All right, so finally I'm like, you know what? Whatever. I'm just going to trade this in my main account. So in my main account, I took my first trade at, it was actually right here. It was at about 9:08 right through here. And I bought this dip, and we got this nice trade here from I got in at 565. 5,000 shares. It goes up to 585 and then took some profit off the table. Let's see. And then I add back at 636, 639, 640, and 650. We get the squeeze right here up to about 660 and up to a high of 680. So, ended up locking up about $6,000 of profit on SGD, just trading the front side of this move. Didn't overstay my welcome, didn't trade the backside. At the open, I was watching it, didn't take any trades. Honestly, just kind of felt like I just wasn't sure. I just wasn't feeling it. I was like, I don't know. The thing is, I sort of felt like it needed to dip. And then by the time, like right in here, it dipped a little bit, but not enough. And then I was like, I don't know. I don't want to get caught at the top of this and then catch a jackknife. And then it just ended up pulling back. And then it tries to come up right here. And then it flushes down and then it halts down. So I was like, yeah, you know what? Leave it alone. So this one pulled back pretty hard. Anyways, I trade the front side of the move. I don't short stocks, can't short them in my retirement account. So trade the front side, didn't trade the back side. And that was that. And then we had drug at the open. So at the open on drug, initially I'm looking at it and I'm thinking, all right, descending resistance right here around 3, right? We break through that, but I'm thinking, all right, well, we've got resistance here and here, the high of these levels. So was sort of thinking 350 was going to be probably the top on this, maybe 360. It ends up going all the way up to a halt up at 387. Now, the problem with that halt up was that, at that point, I was like, well, it's so extended, I don't think I can really buy it. I mean, I could do a dip and rip, and I was watching it, but it was really, I mean, look, we already have this jackknife here, which, by the way, means for the rest of the day, this stock is no longer trustworthy, because once they've done one of these, they will do more. It's only a matter of time. So now you've got to assume at any time you're buying this in an extension, when it's squeezing up, you could catch an instant, dollar a share flush. So now you've got to be really focused on buying off of dips and support. But anyways, so this area here kind of just happened a little too quick. And I was like, I just don't want to screw up my day, because I've kind of had this track record this month of having some nice days like today, and then, giving back too much of it, overstaying my welcome and trading, longer into the day than I probably should. So it ends up dipping. It comes up to 4, and there was a wall there at 4, a wall of sellers. Look at all this buying right here at 4. It just did not want to break. So it's like right here. So a wall of sellers, it finally breaks, goes up to 418, and then it drops down to 370, then back up to 430, then back down, then back up, then back down. So it's kind of choppy through here, going above and below the $0.50 or whole dollar of 4. Usually we don't see that. Then it goes up to 450. And then it punches up to 490, and I was like, oh, man. And then you get that double top rejection right there. So all through there, I was like, no, I think I made the right move to sit it out. The rejection that I saw just before I started the recap, I was like, yep, that's not good. And you know what? Could I have bought this dip here after the rejection above VWAP? Certainly could have. It just would have been a higher risk trade. Could have bought this micro pullback. That's an aggressive move, especially since it previously rejected this area. And we don't know if there's someone out there that's ready to dump a 200,000 share sell order, because that's kind of what creates that. You get someone that dumps a huge order, and then because it's regular trading hours, stop orders start firing. Those are market orders. More market orders fire, and you get this algo flush where all the stops get taken out, and you get this drop. So, now, as you get this squeeze higher, to me, that was a nice little micro pullback, but a risky one. Could have gotten 50 cents a share out of it from about 490 up to 540. And then resumption, this has all just been too choppy so far. So anyway, leaving some money on the table today, but really can't complain too much, because I'm walking away with $9,940.32, which is a really solid day. And you're never going to catch them all, right? So as long as you're booking some profit, I think you're doing a good job. One of the things I was thinking about was, I've been thinking about this quite a lot, because, of course there's, you hear about these short sellers that, take a trade on like a CHSN and just get completely obliterated. CHSN, by the way, just being kind of the latest Chinese stock to do something really bananas, like go in one day from $1 to $44 a share. And, but TNON just, a few weeks ago, you've got some of these short sellers that take the approach of just shorting anything that's going up. And, it's like that works until it doesn't. And then all of a sudden you get this move here where you're just shorting and it's squeezing higher. So like the strategy of anything that's up, 50 cents in the last like 20 seconds, just take a starter short and then add every 50 cents or dollar a share until you get to full size. And then when it finally rolls over, like that's it's such a simplistic strategy. And the tough thing about it is that it will work. It will work. But when it fails just in an astronomical way. Like the failure is so huge. So on something like this, there were people that were shorting it at $6, $7 a share. It starts popping up and they're like, oh, it's extended because it just went up, from 3 to 6. So they take a starter of 1,000 shares. Then they add another 1,000 at 7, another 1,000 at 8, another 1,000 at 9, another 1,000 at 12, another 1,000 at 15. Now they're in 5,000 shares of this at $12 average, and it's printing 22. They're down 50 grand. 32, they're down 100 grand. 42, they're down 150 grand or whatever, 200 grand. And all of a sudden it goes up 100 to 100 and what was this? $130 a share, and you're down $500,000. And so one of the things that I've said is that I've been doing this for a really long time. I'm at an age where this has been pretty much my entire adult career. I had a period of time right as I was going through college and kind of while I was, dealing with the death of my father when he was sick, where I was working at the gas station, and then I was working down in New York City. But after that, pretty much from my mid-20s, I've been full trading. So for 15 years now. So for me, it's like I'm at a point where I really couldn't imagine at this point in my life saying I'm gonna stop trading and I'm gonna do something different. Now I meet some of the young traders out there who they come in and they're young guns and they take a lot of risk, and like you're at an age where you can take risks, so like why not? In a way, like you can recover from it. And they'll have like maybe huge wins, or they'll short these types of things. They'll be taking really high risk trades. And then, if it blows up, they're like, well, I could just go get a regular job, or I'll just go do something else. And I think once you have, 5 years into this, 8 years, 10 years, 12 years, 15 years, the stakes become higher in a way, because you're like, I just am at a point where I can no longer feel like I could just go do something else. What else, would you do realistically living in a rural area like I do, where you'd make $9,940.32 in about 2 hours of work? You know what I mean? Like, you got to be grateful for this. And so when I think about moves like, we had on SGD, naturally there'll be people who are like, Ross, you should trade both sides. You should trade the front side, because obviously there's opportunity there, and then you should just short it on the way back down. And I really was considering that. I was thinking about that a lot last year, because we did see a lot of these round trips, and I thought, you guys are right. I really should. And so I started kind of getting myself set up to do that. And it was, I'm not kidding. It was like a week later that we had ZJYL. And that's why I harp on this, because I feel like I was really close to something bad happening. Because ZJYL was the stock, I got to go to the daily chart, but this is the stock that in one day, it halted down several times. So it was like an obvious short. It would drop like 70% or whatever. And then it halts up once at like 12. It opens at $20. It halts up a second time at like 28 or whatever. And then it's showing a $500 resumption. And it actually resumed at $500 a share. If you were short even 1,000 shares of that, you could have lost $470,000. It's $500,000. And no one's shorting with just 1,000 shares. Most people are doing 5,000, 10,000 shares. You could have lost $5 million. Now, in my career trading, as of right now, I've made a little over $13 million in gross profit. And right now, today, I have about $235,000 in my trading account. I'm up about $850,000 on the year so far, with a $200,000 account. Now I take money out every couple months, so I keep it, but usually between, 100 and 200,000. And the most I could lose right now would be if I put the whole account into one trade and it went to zero. That's the most I could lose, $235,000. And as much as that would be really disappointing to lose that, it would be 25% of my year gone in one trade, I could recover and I could tolerate it. What I couldn't recover from, I feel, emotionally, is if I shorted something like ZJYL, it resumes at 500 and I lose $5 million. Half of my career gone in one trade. And that is the real risk of short selling. And I try to put that out there so you guys know, because this is a reality. So I know a lot of people like shorting, and I know that it works, and it works until it doesn't. And that's what I've seen with so many short sellers, that it works and works and works until next thing you know, you're short something like CHSN and it's halted up and it's showing a big gap higher, and you're getting wrecked. And as much as you want to say, oh, I'm going to put rules in place and I'm going to, this and that, we all say those things. We all say we're going to put rules in place, and, we all try to in different ways, but, we still have points where we deviate from those rules and we make mistakes. A mistake for me right now would be giving into FOMO and trading drug up here. And so I'll voice it. I feel a little FOMO. We've got a stock up 200%. And I didn't take a single trade on it. But the second you start feeling FOMO, something to remember. And I was feeling a little FOMO. And by the way, this is now showing a $12, $10 resumption. So I don't know where it'll actually resume. But imagine if it did resume at $12 a share and you were short 10,000 shares of this at 5, right? So the reality with short selling is that you have an inverted risk to reward ratio, because you can lose an infinite amount of money in theory, but also in reality, we've seen some absolutely insane things in the market where a stock halts up at 7 and resumes at $40 a share. Now, I don't think that's going to happen here, but we've seen that type of thing before. Whereas trading to the long side, your downside risk is going to zero. Now, if you're trading to the long side and you're using leverage, 4 times leverage, 6 times leverage, whatever the case is, then you're certainly taking more risk. So you get a margin call, which is bad, but it's still not as bad as a margin call in a short position that opens at $500 a share. So anyways, I just have a strong feeling about it because when I see new traders or beginner traders approaching the market and just shorting everything that pops up, I feel like they haven't experienced the fear of what can happen when that goes wrong. And it's like when you short, you're kind of trading on borrowed money in the sense that you have to buy this thing back that you've already sold, and you can't control. If all of a sudden it halts up and shows a crazy resumption, there's nothing you can do. And that's what happened with that Chinese stock. So anyways, yeah, that's kind of, just something I've been thinking about a little bit. Sometimes I'll see traders who struggle trading the long side and they're like, I'm just going to switch to, shorting. Or sometimes they'll say, I'm just going to switch to trade futures or Forex or something like that. But, it's just something to be aware of. Just think about your risk. So anyways, great to see this move on drug. You've got 46 million shares of volume on it. Right now it's showing an $8 resumption. This is great. This is good to see. It's disappointing that, the two that I traded from earlier both rolled over. This is the one that keeps going. This is one of those days where I'll say it feels a little bit like getting punished for having the discipline to follow the rules. But here's the thing that I've been thinking about, that feeling of FOMO and disappointment. It's a thought that comes in. It's sort of an intrusive thought. Oh man, I can't believe I didn't trade this. It's sort of, you start ruminating on it. It just is like a little seed, but the more thought you give it, the more you fuel it and the more it grows. And then it can grow to the point where you then act on that thought, right? So it's one thing to feel FOMO. I feel FOMO right now. Look, this stock's up, from $4 to $8. I didn't even trade it. So should I have traded it and made 10, 15,000, maybe $100,000? You start thinking, I would have done so well on it. But lest we forget, it was just last week, as I recall, that we had a stock SKK that IPO'd. And on the IPO day, this thing went from a low of, this was a low of about $4 all the way up to 10. And I managed to lose $3,000 on it. I got in with a good entry. I sold way too soon. I got back in. I sold too soon. Got back in, sold too soon. Got back in at the top, held too long. Boom, I'm red like an idiot. So, you see something like drug, and I'm sure there are people who hit their max loss on it to the long side on this jackknife, or maybe on this one right here. So, that's even more frustrating. You take a big loss and then you come back and you see that it went up 200%. So, it's easy to say in hindsight, I definitely 100% would have crushed it. But we know that in reality, it's not always that clean, especially as we get further into the day, because we see more of the tricks with the market makers, the high frequency trading algorithms, and just more choppiness in general. Right now, we've got about a minute to resumption. It's showing an $8.10 resumption here. The halt price was $7.59, and these halts are usually 5 minutes long. So resumption should be in about 1 minute. And just for the heck of it, we'll watch the resumption and see what it looks like. But yeah, I think for me, the sort of thought process of like, that feeling of FOMO is that urge, that impulse is a thought. And what I'm trying to develop a better relationship with is that's a thought. Voice it, name it. I'm feeling FOMO. And that to try to catch myself before I cross that point of no return where I end up acting on the emotion. I feel angry is one thing. Throwing my computer across the desk or flipping my desk upside down is another, right? So, all right, let's see. Now it's showing an 850 resumption, right? All of a sudden the resumption's moved up. Now, because the resumption is moved up, this may be halted for 10 minutes. That's almost $1 a share resumption. So it should resume right here, but I have a feeling it might do a 10-minute halt. So that's going to be a 10-minute long halt on this. 850 resumption. That's a big gap up. So like I said, if you were short, and I'm sure there are people who are short this, maybe off of this jackknife move back here at 4, who are all of a sudden down $3 a share, if they didn't cover, or maybe people covered and then added back. But to have something gap up $1 a share on you is tough. You look at SGD. This halted down several times, but really it didn't have big gaps. It halted down, it opened flat, went lower. Halted down, opened flat, went a little lower. Halted down, opened flat, went lower. You will get a gap down on a halt when a stock has halted up 3 or 4 times in a row and then halts down. So that's the time we see the big gap, drug. It's not usually just on like one halt down. So that also is kind of like amplifies. You have amplified upside because if you get in and it gaps up $1 a share, it's like cha-ching, awesome. That's an instant dollar a share winner. That was amazing. Uh, and so like that's like an added benefit of trading these to the long side when you get a halt up. Being caught short in a halt up, that's something that a lot of traders really get worried about because it's like, uh-oh. Now, all of a sudden, what could happen on this is, let's say there's someone who's short 100,000 shares. And all of a sudden, it resumes at 850. They're down like 200 grand. And they just instantly mark it out. They press the buy button. This thing goes straight to 875 to 9 to 950. It halts up a second time in a row. They didn't get a chance to get filled. Their order didn't go through. There were too many buyers, not enough sellers. Now it's halted up again at 950 and it's showing a $14 resumption. And now all of a sudden they've gone from, a $7 average and they're down $10 a share, right? It's $1 million loss. And there's a lot of people that with shorting, they'll just keep adding and adding and adding and adding. And like I said, it works until, you get this blow up. And then that's when things get really scary. I've seen it happen. The trend that I've seen with a lot of short sellers is, their equity curve will look kind of like this. I'll just draw it. It's like it works, and then they give back like almost all their profit. It works, and then that black swan. And I don't want to be a trader who exposes themselves to black swans, black swan events. No one likes a black swan. So all of a sudden you catch this massive drop, and in one day you get back that could be 10 years of progress gone in one day. And it doesn't matter what you say, like unless you're only going to trade large caps. If you're going to only trade large caps, you're going to reduce your risk shorting. Then okay, I would say all right, fine. If you're just going to short Nvidia and Tesla and stuff like that, fine, okay, that's fine. But if you're going to short small caps and you're going to short a penny stock, you're going to short a stock at 80 cents where the most you could ever make is it goes to zero. But it could also end up going up to $4, $5, $6, $8, $10 a share. That just is, I think it's a very risky strategy. And I think that there are younger people who can tolerate that risk and maybe figure, well, even if I get that margin call, I'll just file bankruptcy. I'm never going to pay it anyways, So the broker's the one who's going to get screwed, not me. I mean, not that filing bankruptcy wouldn't totally screw up your credit, but once you get a little older, I think you realize I need to be thinking about, well, there's a tax component, which is if you trade in a retirement account, you get to keep everything you make. There's no taxes. You can't short in a retirement account. So you got to short in a regular account. It's taxable. So now you only keep, if you're $1 million trader, you're only keeping 40% of what you make, roughly, federal income tax. So, sorry, you're keeping 60%. You're paying 40% of what you make in tax. If you live in a state like New York or California, you're paying another 8, 10%. So now it's like, it just starts to not make sense. All right, so we're watching this here. We've got about 40 seconds to resumption, showing 850 still. What sometimes happens, see, it's interesting, that resumption price moved up right before it was supposed to resume. And that created a 10-minute long halt. Sometimes I think that this is a little bit of a strategy that some traders use to create a longer halt time so they can try to find more shares to borrow. Because sometimes it can be very hard to find shares to borrow on these types of stocks. They could run out of inventory. And then the other thing is they sometimes want to slow down the momentum. Just slow it down so traders kind of just like settle down a little bit. When traders are really amped up, next thing you know, you can get this frenzy. So longer halts slow down the frenzy. So now we've got 9, right? Are we going to halt up? 1020 is the next halt up level. See, look at that. See how all of a sudden it's like 1067, 1070? See what I'm saying? So now you've got another halt and we're up 300%, right? And now watch what happens when this halts. The resumption is probably going to be 11. So if you were short, would you have time to have gotten out of that? Resumption now showing 16 for a second, 100, 22, 36. This is a 4.6 million share float, $14. So, all of a sudden it's like huge, just massive. So you've got a high there, 1020, but it's going to resume higher and it's going to push higher. So, right now the resumption's coming down a little bit. All right. So what happens here is when it first halts, there's only buyers. There's all the people that are buying into that halt. You don't have sellers usually. I mean, all the sell orders kind of get canceled because people are like, how high is this going to go? So now you have the people who have basically market orders to buy, and these halts create an imbalance. And so that imbalance, the way it basically is when the stock is halted, I've got to switch this around. When the stock is halted, you've got an auction. So you've got the buyers and you've got the sellers. And when there aren't a lot of sellers, then the buyers just push the resumption price higher, 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 higher. So now we've got, showing $11 resumption, which makes sense. 11 does make sense. And I'm sure you'll see on social media people posting 6-figure losses on the short side on this. Having a stock go from $4 to 10 is very, very bad for someone who's who's short. But the thing again for me on this still is, that those jackknife candles before the move, that's always really tough because it takes away my trust. And then when I don't trust it, I don't take big sides. I just feel like I can't afford it. So, but that was impressive. So now anyways, what are we showing? 1240, right? So now we've got one halt, two halts. So 2 back-to-back halts in a row. All right. So what's going to happen next? At this point, after 2 halts in a row going up, what often happens is you get a surge higher. We're going to resume, let's say $12, $13 a share. So we're going to resume quite a bit higher here. So let's say we resume at 13. What will probably happen is we'll spike up because some people who are short right now have a margin call. They already have a margin call, which means their broker is looking at their account and is saying, this person is in the negative. We've got to cover. So they take over their account. The person whose account it is gets locked out. They take over their account and they just press the buy button to cover the position. So now they've got to cover it. So you're going to initially have a spike. Most likely, you'll see a continued spike higher from some additional short covering, and that's just like panic market order covering. If there are some big shorts who are buried, it could go into a third halt up. That could happen. I don't think it will, but showing 13 is pretty powerful. It's another 3 points higher. So it could. So you get a third halt up, and then you get that blow off top. So the blow off top is what's going to happen eventually here. And what's going to happen is you get that final squeeze, and then boom, you're going to get a reversal. Anyone who's still holding, when they see the red, they're going to be like, all right, I'm out of this. Boom. They're going to press the sell button. And then there are other shorts who are going to add to their position up here to average down. And some who haven't taken a position yet will take their first position here. Those will be probably the most experienced ones who are feeling confident. So shorting it up here and then looking for that first halt down. You get the first halt down after a move like this. 1 halt, 2 halt, 3 halt up, 4 halt up, 5 halt, whatever it is. First halt down almost always does gap and open lower. However, what we can get off of that is a washout where you get a bounce back up from short covering. So you get this, and from people who are just dip buyers, which would be like me. So you get 1 halt, 2 halt, maybe it's a third halt, maybe it's a 4th halt, we don't know. But at some point there's gonna be the blow off top, and then it's gonna flush back down, and this will almost definitely halt down. After these halts up, it's almost definitely gonna halt down. So it'll halt down, drop, and then open lower, and then that's where some people will buy. And sometimes you'll see a rally all the way back to the high. Now that's a little bit, that doesn't happen as often. So where it halts down and then comes all the way back up to the high and then pushes even higher, that's pretty high risk. And we see it occasionally, but we've really only seen that in like the hottest markets. It's just, that's not as common. I don't know that would happen with this. But I have to say, this is a very impressive move. And it's surprising. What's surprising about it to me is that if the news and everything was really so strong, well, actually, this one didn't even have news. So that's part of it. So this didn't have news. This was just grinding higher yesterday and then pushed higher after hours. So people were shorting it after hours for this fade. Some people holding that short into the next day. It continues lower pre-market, which makes sense because there's no news. There's really no reason for this to be going higher. And then all of a sudden, it just starts pulling away. So it's just a funny setup because if you'd think if it was really strong, why did it wait until right here? Why didn't it just continue right here? Why not here? Why not here? And I guess in this case, the actual technical catalyst, which was that it was up like 30% or whatever, 50%, wasn't enough. It was enough to get people to short it. And the people who shorted it got trapped. And so this created an intraday short squeeze. Now, while the total short interest may not be high based on the 14-day report of the last couple of weeks, overnight it can change dramatically as people load up on this. And so it was looking weak pre-market. So there might have been people who were shorting it thinking, let's go back to yesterday's area of around $2, right? So 250, they're still thinking short. And when you have something at 250, that can be when you're thinking, all right, it's at $2.50 a share. This thing might actually go back down to 2. I could take 20,000 shares of it. And now you're in 20,000 shares, massive position, and whoa, holy smokes, right? This could be easily a $200,000 loss, or higher. So yeah, and I mean, from a technical perspective, you've got, your MACD, of course, is open here. Relatively light volume on the red candles, higher volume on the green candles, decreasing volume right now. But that's partly because how much time is it trading? It only traded for not even 20 seconds. It did 20 seconds and it went up with about 1 million shares of volume on the last resumption. So that 5-minute candle will show just 1 million shares of volume, but that's because it was halted and only traded for 20 seconds. If it actually traded for the full 5 minutes, that would be different. You'd have a lot more volume. But, in this case, we're not. So, yeah. So I think this one, this move was really hinged on not the quality of the news, but on shorts getting trapped, which is interesting. I tend to do better on stocks like, right, that have breaking news, like 7:30, 8:30. That's what gave me that good trade on Verb yesterday, right? Verb had news, came out right here at 8:30. The thing goes from 750 up to 16, went up 100%. I'm usually going to do better on a move like that for a couple of reasons. One, the move is driven by a clear catalyst, has no volume, and then boom, all of a sudden volume comes in because you've got news. It goes basically straight up. You could buy these micro pullbacks. Beginning of the move, shorts usually are more cautious. So it's just like, okay, let's just see what this does. Goes up to 15, pulls back, and then up to 16, boom, just like that, right? So that's like a really nice move. You don't have to deal with halt levels. It's just really solid strength. So that's a 100% move right there. Now, drug, and comparatively, the drug, let's see, we'll pull this back up. Right through here, from 6 to 10, I mean, that is solid. There's no question about it. That's a nice move. But in a way, Verb is kind of cleaner yesterday because it was a clear catalyst and there weren't jackknifes before it that gave me reason to be really cautious. So I think even if I had traded this, I don't think I would have made as much as I made yesterday on Verb, which was like 13,000, 14,000. I'm not saying I wouldn't have probably been able to make something out of it, but I don't think I would have. It's sometimes people be like, oh God, Ross, if you had traded this, you would have made $100,000. And it's like, probably not. I mean, yeah, if I bought 15, 20,000 shares and I kept adding, but realistically, to make $100,000, if you look back at my $100,000 days in 2020 and 2021, I had stocks I was buying at $5, $6 a share and they were going up to $25, $30 a share. I mean, a 3-point move, I couldn't make 100 grand unless I owned 30,000 shares and caught the full bottom to top of the move. So it's not a 6-figure trade. It's not possible for me really. At this point, given that we do sometimes see, some moves like we saw in Verb yesterday from 7 to 15. There you go. So there's your resumption. Let's see. So next halt up is 1344. Now that actually is interesting because it resumed much lower it appeared it was going to resume around 14. It actually resumed lower. So that's a little divergence as well. That might be, I don't know. That might be the top right there. So we'll see. I mean, it's showing a $16 resumption now, but just before, I should have pulled that up just before it resumed, but we were looking at, it was showing like $13, $14. So resuming at 11 was not what I was expecting. So it resumed a lot lower there. But anyway, so now you've got 3 halts in a row going up, showing a $14 resumption, which is a little confusing. So 14, 16, 1670. I mean, we'll see. What I want to wait for is the first halt down, because that's when we know we kind of have the top. The top is in when we get that first halt down. So let's see. What was the volume on this candle? Volume, again, it was only open for 10 seconds, 20 seconds, basically. We had total volume of about 700,000 shares. So again, you could see volumes declining a little bit. So that makes sense. It makes sense partly because the price is higher. 10,000 shares of a $13 stock is a lot, costs more money. So you're not going to be able to buy as many shares for the same amount of money. And I think most longs are not buying up here. So who is buying? Shorts covering. That's what I would say. I mean, if you're a long and you're buying up here, you're taking a lot of risk. I'm not saying it might not work, but you're taking a pretty considerable amount of risk. So now we're showing a $20 resumption, right? Whoa. So, this is where you can get a real bloodbath for someone who's still holding short, especially if they're in from $2, right? They're in from $2.50 and they just keep adding. This is where it gets real. That's a 6.5 point gap up if we really open this high, right? So it's just crazy how, this is kids like a freight train, and you sometimes don't realize it's a freight train when you short in front of the move. You just think, this is another one of these stocks that's popping up. It's going to reject. And, that's it. But, well, I mean, they can creep up on you. And that's that thing with emotions too. You feel like you're doing really well, and then you start getting a little sloppy and start making some mistakes. And it's not fun to have a big mistake. It's not fun to have a big loss. We've all had them. I mean, we're traders. This is part of what we do. So it's to be expected. But, you start to get emotionally impulsive on something like this, things can get pretty serious. So let's see. All right, so we're sitting here. So we're coming up to 11 a.m., right? So it's showing $120 a share. This is crazy. $1,370 a share. So no trades on this for me. I just turned on my broadcast there. So I was, I've been doing this recap here, and the recap is like 43 minutes long, because all of a sudden this started halting up, and I was like, oh shoot, all right, well, let's see what this does. But I didn't take any trades on this. So the issue for me, for those of you guys listening live, the reason that I didn't want to take trades on this was because it is just too late in the day for me, and this is not a breaking news type of trade. This is a short squeeze, and I love short squeezes, but I tend to do better on short squeezes when they come right off of sort of breaking news and a stock that already had high short interest. This is a little bit different. This is a stock that squeezed up yesterday with no news, and then rolls over and looked like it was kind of done, pops up at 4 a.m., rolls over more. And I think shorts felt pretty confident on this. They're like, this is dead. Like, this thing is going to go back to $2. So yeah, let's go ahead and short 100,000 shares. And then all of a sudden it goes up to 3, which I initially was like descending resistance. Then it's at 350 and it halts up at 387. All right, well, shorts will add, whatever. Then it goes up to just about 5, drops down. You get this jackknife right here, which this was the last thing that I saw. This is right before I started my recap was this jackknife. And I was like, yep, see, that's right. This is the problem. You jump in something like that with 10,000 shares, you catch that knife, all of a sudden in one trade, that $9,900 is gone, right? And when you start feeling FOMO, to me, that says you're no longer grateful for what you've got right here. That's the problem. When you start feeling FOMO, you're no longer grateful for what you've got. And so that was kind of my my feeling, is that if I give in to FOMO, you know, I'm no longer grateful for the $10,000 that I already have, because $10,000 is good money, and there's not much else I could do that would have made me $10,000 in 2 hours. So yeah, I don't have a single trade on drug, and this is a major exercise in discipline. So I'm at the gym right now, and I'm lifting discipline. And these guns, I mean, I'm going to need to get a permit, you know, a license to conceal, because they're getting big. But I also have to acknowledge that, you know, in all fairness, that days like this can be really exhausting. It can be really hard to watch a stock go up this much and to not get any of it, and to feel like, oh my gosh, I'm an idiot, this and that. I have a meeting at 11. I'm just going to tell them I'm running late. So I might have to take a call real quick, but that's okay. We'll just keep this going because I do want to see the resumption. So right now, the resumption it's a 10-minute long halt, but resumption prices come down. So again, I feel like these long halts, they give. So the last time I checked the shares, they were about 5 cents a share to borrow. Let's check it now. Now they're at 6 cents. And there's only one provider left. The other provider is not available anymore, so they ran out of shares. So the cost to borrow has gone up. That's going to happen. So all of a sudden your cost to borrow is going up. It's going to be harder to get shares. So if you're now short and you're in a big position, you might be thinking, all right, I need to get on the phone and try to figure out, can I get more shares? Some brokers are saying, some of you guys are saying 11 cents, 19 cents, 25 cents a share to borrow. So now it's getting expensive. Now the broker, listen, I'll also tell you, brokers want you to short stocks. Why? Because they make a ton of money on the borrows. They make money on the borrows. So they want you to short. I mean, they don't want you to blow up your account, obviously, because then you're not going to be a customer anymore. But if you spend $500 a day on borrows, that's $100,000 a year for them per customer. You know, they get 1,000 customers like you. They're making some good money just on the borrows. Now, the borrows they get a markup on, right? They have to pay to the person that they borrowed from, but they get a big markup. So, you know, they make money on that. But, you know, it's no different than the commission-free brokers. They want you trading too, because the more you trade, the more money they make with the payment for order flow. So they're all kind of self-motivated in these ways. All right, so they have their own motive. But let's see. So 11:01 a.m. right now. The last print went through here. If I put this like this, doesn't matter. At 10:53. So resumption should be at 11:03, which means we're less than 2 minutes away from resumption. And I just suspected it would be a 10-minute long halt because of how big the gap was showing. But then as soon as it passes the 5-minute mark and it becomes 10-minute, then the halt, then the resumption price came down, right? So that's where it gets a little tricky. So why does the resumption price come down? Someone probably put out an order to buy 500,000 shares at $20 a share. And it's such a huge order that all of a sudden it creates this higher resumption because it moves the auction price higher. So Joel's saying someone posting a $300,000 loss on this short seller. Easy. You have this kind of move. Yep. That doesn't surprise me. You got 48 million shares of volume on it. And look, you know, they may be right that it's going to come back down eventually. But now if this goes longer than 10 minutes, then I think I'll just, I'm not going to sit around for all day long to watch. You know, it doesn't really matter. But anyway, so right now we're coming up to about 30 seconds to resumption, still showing $17, which would be a big gap. So this may be the time where we get that longer halt. And these longer halts, they slow down the momentum. And unfortunately, they give short sellers a little bit of an advantage. Because now, as momentum in the frenzy cools off, the buyers that are bidding it up, maybe some of them pull back. And then the resumption price comes down lower. So if we pass the 10-minute mark, the resumption price is going to come down more. So watch this. Now 16.95. So that right there was the 10-minute mark, and it's come and gone. So we didn't resume at 10 minutes. So now it's going to be a 15-minute long halt. Right? So you start to have some buyers that pull back, or some shorts that sort of are capitalizing on the fact that the frenzy is dying off a little bit. This is the thing with the halts is, it's just the way it is. They've been put into the market, to control and limit volatility and prevent flash crashes and things like that. But then they have their own sort of set of unexpected or unintended consequences in the way they change how people trade around these levels. And it's the gaps, you wouldn't, having a 5-point gap higher, it just all of a sudden goes from 1344 to 1690. Or in the case of ZJYL going from $20 a share to 500, that doesn't make sense. That would have never happened. So somehow the, regulation of adding that created the opportunity for some of these really insane moves. And I think that's a problem. Especially in the case of ZJYL, because, that was such a big loss for people. And I get why people are like, it doesn't make sense and it's not fair. It's not fair. Shouldn't have happened. And I agree, it shouldn't have happened. But the market doesn't give refunds. So this was ZJYL. Halted down 1, 2, 3, 4 times, then halted up at 1250, resumed at 20. So an 8-point gap higher, then halts up at 25. And as soon as it halts up, what is it showing on the level 2? $500 a share. Just the way this was showing 100 for a second and 1300 for another second, ZJYL was showing $500. The only difference was that it actually opened at 500. It actually opened at $500 a share. A 5,000 share short position, $2.4 million loss. 10,000 share short position, $4.8 million loss. And let's just think about the person who lost $300,000 today on drug. How many shares do you think they had short? Let's just be real. It wasn't 30,000. You couldn't have lost 300 grand with 30,000 shares. Maybe 100,000. Maybe 100,000 shares. So imagine with 100,000 shares, this could have been a $48 million loss. So if I file for bankruptcy at that point, you're done. You're going to lose everything you have. Your broker's going to take it. They're going to sue you. You're going to lose everything. So, if you were going to try to figure out the fastest way to blow up an account, I would say, you could buy options because they'll expire worthless. So probably the very fastest way would be to buy options that expire worthless. The second fastest way would be shorting these small cap stocks, because while you would have some winners, look, you'd have some like a BNZI or whatever that you short it and it does the full round trip. All right. So you know what? Some of them are going to do the round trip and, all right. So you get some that work. And then you catch a CHSN or you catch a drug or you catch a, whatever it is. And that's when it's over. So, man, it's just crazy. I don't know. Yeah. Yeah. It's, it's just wild. So, yeah, I think one thing, one thing to think about is usually, usually when you have a big move like this, we will have other stocks, that there it is, 1550. And there's the first halt. This is gonna be the first halt down, probably. So maybe not, but see this, there's a lot of selling there. But you know what? Oh, see, no, wow. That's gonna go through that level. So there's 17. Yep. But look at the volatility here. Oh my goodness. Back to 15. I thought I was going to break through 17. So I was wrong. I would have just added at 17. If I was sitting here with trading, I would have added at 17. I'd be down $3 a share because I thought I was going to break 17 and go to 1848, the halt level. So now we're back at 14. Golly. But there we go. There it is. Okay. So now shorts are leaning onto it. So, gosh, look at that swing from 17 down to 12. So I could have lost 2,000 share position in at 17. I mean, I thought it was going to break 17. And I know that I'm crazy here because, you know, I'm a momentum trader and, you know, I buy high and sell higher. But I thought it was going to break 17 and go to 18. Here's the reason I thought that. I thought it was going to do that because usually when you get that first flush of selling, we halt down. So I was thinking, okay, we just broke 14, we're gonna halt down. So then the second it broke through 16, I was like, whoa, we're getting another wave higher. Uh-oh. And then all of a sudden at 17, I'm like, we're gonna do another halt up. This is gonna be insane. And then you get that dump. So like, it's tough, guys. I mean, it really, this even for someone who's been doing this for a long time. So of course, the reason I didn't put any money behind that thought was just exercising that discipline and just saying, you know, I'm not going to break the ice at this point. It would just be so silly and crazy to do that. So, you know, didn't take the trade on it, which was the right move. But yeah, so now it's showing a 1068 resumption. And your best bet at this point would be, so two possible things could happen. So, I mean, anything could happen, I guess. But this could resume and it could halt down again. But I kind of don't think it will. I think what will happen is it'll resume, it'll go a little lower, and then you're probably going to get some dip buyers who are going to come in just because typically when you get a halt down like this and then it opens lower, you just typically do get a little bit of a bounce. So that's a setup that a lot of people are going to look for. Grab, you know, a couple thousand shares or whatever, more for some people, and just catch that bounce back up. It could be a bounce from 10 to 11, $1 a share. It could be from 9 to 10.50, $1.50 a share. But there'll be most likely a good bounce opportunity on this. The thing for me is that I don't usually like to mess with that because it is trading the backside of the move. Once you have that big candle, everything else is the backside unless it breaks a new high. Which you wouldn't really expect. You look at a chart like this, and you know this is a chart where you're getting, I mean, clearly a rejection, right? I mean, it's fine. Look, from $4 to 16, it's a great move. Can't complain. But yeah, I think I don't think it's super likely that it goes back to the highs. Again, could be wrong. You know, if there's some shorts that are still in heavy, you know, and it holds this area, then you could hold, as long as it keeps holding, then you get forced for another move. But we also have a second problem. Even if I said, you know what, I really think this is going to go through the high, now we've got to look at another reality. So that reality is, this is my year to date, $846,000. And let's look at price and volume. Where do I make the most money? Well, it's between 5 and, you know, it's between 2 and 5, 5 and 10. So now you start getting to 10 to 20. See, that's a little tricky. Let's click the 10 to 20 range. Let's just look at my accuracy in the 10 to 20 range. We'll go to reports. In the 10 to 20 range, my accuracy is 61%, but I do, see, biggest loss of the year, $20,000. This is where I start catching some big losses. We take this this time filter away. We just do custom range. I'll just do from like 2014, whatever. I think you're going to find a similar pattern. It's a big loss, you know. I mean, 1-to-1 profit loss ratio, but I just know that once you get into this price range, I mean, look at how fast that went from 17 down to 12. Like, it can get pretty bad pretty quick. You're dealing with bigger spreads with lighter volume because there aren't as many people who are going to put out 10,000, 20,000 share orders. So the order book's going to thin out, and yeah, this can get pretty wild. So, all right, well, you know what? For those of you guys that locked it up and made some money, good job. Give yourself a pat on the back. Don't overstay your welcome. And remember, there's always going to be another one around the corner. So even if you missed this one, Doesn't matter. There'll be another one sometime soon. So hopefully we get one, that occurs. Well, I always like it, as I said, when it occurs as a result of breaking news a little bit earlier. But nonetheless, that's a great move. Good job. Congratulations, guys. A reminder as always, trading is risky. My results aren't typical. So manage your risk, take it slow, and I'll be back at it first thing tomorrow morning.